Okay.
Hi everyone. Today I'm going to talk about sustainability, especially looking at how organizations report their sustainability impact using the GRI standards and how the credibility of these reports is strengthened through assurance, including both GRI own guidance and AICPA attestation standards. What is the GRI? The GRI is a global reporting initiative is the most widely used framework for sustainability reporting worldwide. It helps organizations communicate their environmental, social, and economic impacts in a structured and transparent way. To say a report is prepared in accordance with the GRI standards, an organization must follow the structured process using three universal standards. GRI 1 Foundation, GRI 2 General Disclosure, GRI 3 Material Topics. Then we must also apply relevant topic standards, like those related to climate, water, labor, depending on the material topic identified. There are two levels of GRI reporting, core and comprehensive. Core, a basic level for organizations starting out, it requires only the essential disclosure and one topic specific disclosure per material topic. Comprehensive, a more advanced and detailed level. This includes all disclosures plus more information on ethics, governance, and strategy. So, core is a basic transparency, and comprehensive is a full transparency. Disclosure includes four key areas: organizational profile. Who are they? What do they do? Strategy and analysis. What's their approach to sustainability? Ethics and integrity. What values guide them? Governance. How are the decisions made? There are groups into three. The specific standard groups into three main categories. GRI 200 is about economic, financial performance. GRI 300 environmental and 400 social. It's about labor right, diversity, health and safety, and human rights. External assurance. Just like financial statements, sustainability reports can also be externally assured. According to GRI Disclosure 102-56, there are seven key elements for effective assurance. Scope and objective. What was checked and why? Assurance provider. Who did the review and are they qualified? Assurance standard used, for example, ISA 3000, level of assurance, limited or reasonable. Assurance conclusion. What did the review find? Recommendation. How can the report be improved? Independence. Is the assurance provider neutral? These add credibility, transparency, and trust to the report. And the second one, in the US, sustainability assurance often follows AICPA attestation standards, particularly Section 50 and 101. The main focus is on independence and objectivity and evidence collection and giving a clear conclusion about the accuracy of the data. There are two types of engagement: examinations provide reasonable assurance, and reviews provide limited assurance. A great example is UPS sustainability reports. It uses third party assurance providers to review selected metrics like emissions and fuel usage, following these attestation standards. Next part, Andrew will continue with part three.
What types of engagements does IC3000 cover? IC3000 applies to assurance engagements on diverse non-financial subject matters requiring either reasonable or limited assurance and includes both attestation and direct engagements. Would IC3000 allow accountants to provide assurance on an organization's sustainability report? Yes, IC3000 explicitly allows accountants to provide assurance on an organization's sustainability report, provided the engagement meets the standards requirements. What level of assurance is allowed with IC3000? Two levels. One is reasonable assurance. Two is limited assurance. How do requirements for performing assurance engagement using compare to the requirements for performing insurance engagement using? IC3000 use reasonable or limited assurance, other examination or review under ICPA. Well, both IC3000 and IC require professional skepticism, ethical compliance, and quality control. The IC3000 framework is broader and applies to a variety of assurance engagements, while IC is strictly focused on financial statements audit. The key difference lies in the level of assurance, nature of subject matter, and the required procedure. IC3000 provides a structured framework for conducting an assurance engagement, focusing on technical procedure, risk assessment, and professional standards. Grade 102-56 emphasizes transparency, disclosure, and stakeholder communication regarding assurance. While both frameworks share common elements, IC3000 is more rigorous in its requirements, whereas GREE promotes credibility and accessibility of assurance information for the public. Advantage of issuing a sustainability report include enhancing corporate reputation and brand value, demonstrating commitment to environment, social, and government issue. Disadvantages include high cost and resource-intensive risk of greenwashing, complexity, and standardization issues. While sustainability reporting is becoming a global expectation, companies hesitate due to cost, risk, and the complexity of the process. Next.
Thank you, Andrew.
Halima.
Thank you, Andrew. So I'm going to start with the advantages and disadvantages of third-party assurance on sustainability report. The advantages and the disadvantages of the sustainability provide independent validation for the ESG disclosure. According to the CPA Canada, assurance strengthens trust among investors. The sustainability report is becoming an essential practice for organizations aiming to demonstrate their commitment towards environmental, social, and governance ESG responsibilities. CPA Canada emphasizes the integration of financial and non-financial performance metrics to ensure transparency and also help the stakeholder and align the trust with the global sustainability framework. This report follows the CPA Canada guidance for sustainability reporting, focusing on role of assurance, key challenges, and comparability insights. The reasons for this is the third party is the fear of negative finding and the lack of standardization. The key challenges for accountants providing assurance to evolving the frameworks. Accountants must stay updated on global sustainability standards, such as the GRI, SAS, the TCFD, and integrated reporting, which are continually evolving. Also, the data integrity. The sustainability of the data lacks financial data, which are inconsistencies in collection method and definition and their system. The advantages of accounting firm, it helps to expertise in assurance standards, the AICPA attestation standards, and the IC 2000, and the chartered standards on assurance engagement, the 60,000 as well. All of these helps in the expertise of the expertise of the assurance services. Also, the comparison is going to be the criteria for accounting firms and the non-accounting firms, focused on the reporting and also the technical expertise. In conclusion, from CPA Canada perspective, third-party assurance on sustainability reports is critical in enhancing transparency, accountability, and stakeholder trust. While accounting firms bring credibility, independence, and assurance expertise, non-accounting firms often provide deeper technical and industrial specific insights. Thank you. I'm going to hand it over to
Thank you, Halima. Now let's dive into Caterpillar Incorporation's latest sustainability report and 10K filing to uncover how this industrial giant is integrating sustainability into its core operations. So first up, let's explore the key aspect of Caterpillar's sustainability effort. One major focus is environmental performance. Caterpillar has achieved a 35% reduction in absolute greenhouse gas emission from 2018. They are also enhancing operational efficiency by implementing energy-saving initiatives across their facilities. Caterpillar is minimizing waste and conserving resources. Product innovation is another highlight. Through their cat treatment program, worn-out components are refurbished to like new condition, supporting a circular economy by reducing waste and the need for new material. These initiatives align with the Global Reporting Initiative principles, emphasizing materiality, stakeholder inclusiveness, and sustainability context. Now let's examine the consistency between Caterpillar's 10K filing and their sustainability report. The 10K outlines strategic areas like operational excellence, expanded offerings, services, and sustainability. These priorities are mirrored in the sustainability report, showcasing Caterpillar's commitment to aligning financial performances with environment and social responsibility. How does sustainability connect to financial outcome? Investment in energy efficiency lead to significant cost savings. Moreover, sustainable practices enhance brand reputation and mitigation risk, fostering long-term revenue growth and boosting investor confidence. Sustainability is deeply integrated into Caterpillar's management process. In human resources, there is a focus on employee safety and environmental compliance training. The financial department ties capital investment to environment risk reduction. Procurement enforces supply sustainability standards. This comprehensive integration underscores Caterpillar's dedication to embedding sustainability across all facets of the organization. Next slide, please. Thank you. Integrated reporting is transforming corporate reporting by merging financial and non-financial data to showcase how organizations create value over time. Let's explore its key advantages and disadvantages from an auditing and assurance perspective. Advantages includes like enhanced stakeholder understanding. It provides a transparent and holistic view of an organization's performance, risk, and a long-term strategy, fostering trust among stakeholders. Second one is improved decision-making. Combines financial metrics with non-financial indicators, offering a comprehensive view that aids both management and auditors in strategic planning. Assurance opportunities. It facilitates combined assured engagements, streamlining process, and minimize duplication of efforts. Fourth one is your strategic alignment. It demonstrates the connection between an organization's mission, risk, and capital allocation, enhancing the auditability of non-financial data. However, there are notable challenges too, like complexity, necessities, robots, international controls, and data validation across various departments, including HR, finance, and sustainability. Second one is lack of standardization. The absence of universally accepted frameworks can lead to inconsistency in materiality judgments, posing audit challenges. Third one is risk of generic reporting. To simplify, reports might omit crucial specifications, diminishing their usefulness for decision-making and auditing. The final one is your resource intensive, ensuring the quality and completeness of environment, social, and governance. Data can be costly and time-consuming. In conclusion, while integrated report offers significant benefits in promoting transparency and strategic insight, it also presents challenges that organizations must navigate carefully. For auditors, the emphasis on ESG, Performance open avenue for new assurance services, but also demand adaptation to uphold the reporting integrity. Thank you.
Thank you, Akshika.